Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. As usual, we have prepared weekly report. There are lots of interesting stuff. The major conclusion that we could make is that, we start to suggest that markets in general underestimate the dovishness of the Fed policy. Currently, there's common expectation of just single rate cut in 2025, approximately somewhere between June and October, because market just priced in approximately 30 basis point cut. But overall situation, by our fundamental view, analyzing the statistics, recent news concerning the budget, concerning the debt, some other stuff, some other issues suggest that actually not only the United States, but all the J7 central banks have no other options but to follow the synchronized harmonic dovish policy. This is because of the debt burden and ignoring the possible inflation expectations and rising of the yields. They just actually have no options. That explains why the Goldman Sachs, among all other big houses, keeps the most dovish forecast for the Fed policy. They just previously have suggested 4 rate cuts. Now they downstepped for the 3 rate cuts in 2025, but this is still 2 times greater than market in general expects. And we suggest that really, some feeling that Goldman Sachs, it seems they're right in this expectation. At least this is the conclusion that we have made from our own personal fundamental analysis based on the market. So also there are lots of interesting moments exist currently for the market. That demand is still strong for the gold, and it's suggested to be strong. And actually, currently, some political risks also exist here with the coming Donald Trump to power, especially in relation to European Union, and all this stuff together making situation in the global finance as a total mess. Naturally, in such environment, investors and just common people will start searching the island of the stability. They will gravitate to some stable physical assets that you could touch, you could hold. And that's obviously the commodities. And the gold market, and gold in general and other precious metals, supposedly will be among the first ones in this list of the assets that's attractive for investments. Just for information, that the KRB index, is a Commodity Research Bureau index, increased in price for the 33% in 8 hours, in 8 months. So this just shows you what the inflation level stands right now. You probably saw the recent oil prices jumped. So all this stuff suggests that the gold market should keep its attractiveness in the nearest time and in general through the year. So with the more details, you could read the report. Speaking about technical side, we keep our journey with our big pennant that actually mostly weekly setup, but we traded day by day, and currently, as I already talked about this in last week, it turns to the second stage. So the first stage for us was to get the good entry, and we have tried to do this as a vital point around 26. After 2 weeks have passed, we now see that gold performs pretty nice and is ready to turn to the second stage, which suggests to break out the pennant. So here's what we will be busy with on the coming week. Currently, based on the weekly picture, and you will read in our weekly report, we have good bullish signs on the weekly chart. But in the short term, right now on the daily chart in particular, there are not bad chances for a minor retracement here. what are they actually? First, on the daily chart, market hits the COP target. This is minimum 618 extension of the same ABCD patch. Our next target here will be 27.70. This is previous top, and as you will see, this is also weekly oversold. Overbought. So that's why we do not see any reason currently to consider higher standing targets. So that's probably will be nearest destination point on the daily chart. By taking a look at the lower time frames, we'll take a look at the 4 time frame chart. You could see that COP also makes an agreement with the major 618 resistance level, 26.93, 27. So this is already agreement resistance. And we have also another agreement with this local XOP target that we talked about in last week. All these things taken together suggest that some minor response here quite possible. At the same time, since market stands just at the initial moment of the breakout of this pennant, we do not want to get too deep retracement. So obviously we do not want to see the breakout of 26.13 area. That's already marked as an invalidation point. And in general, we will be happy if retracement will stack somewhere between these two levels. So first one on the hourly chart is 26.65. And the conference area 26.46, 26.53. So these two levels I would consider as a primary one. And if market will show retracement only to these levels and then starts up reduction, that will be perfect bullish behavior. Why we consider this level? This is also minimum target of this butterfly on the hourly chart. It's also completed perfectly. So this is the first level that you could consider. This, of course, for those who do not have any long positions. If you have it, you probably just could keep them or think about adding more in these levels. And the confluence is interesting just because it's more solid and provides better probability for upward action and minimize the risk for entry. So that's the reason that we consider it, because 26.26 it will be very close to invalidation point already and will be not as attractive as deep retracement. In this case, market will move too deep back inside of the pennant, which will be, well, not very good sign. And in this situation, probably I would prefer to wait and see what will happen. I would not take position immediately if market dropped to the 26.26. So that's actually our inputs for the trading scenario on the next week. Let's start with them and then see how it will go. Bring adjustments as usual day by day in our updates. So that's our view on the gold. Let's see.